setting up your meeting for Facebook Live.
Good morning. So it's Thursday, it's 9 o'clock, and it can only be Property Angels Coffee Kickstarter, the place where you hear about the coalface reality of being an entrepreneur. Now, we're the Property Angels, and each Thursday we bring you Coffee Kickstarter series. Right now, we're in the middle of the business special series with the fabulous Fiona Talbot. If you'd like to catch up on the previous episodes, you can go to our YouTube channel, 3 Property Angels. You can also connect with us on LinkedIn or on Facebook. Lovely to see you here this morning, and we're ready for another fabulous Coffee Kickstarter. So to get things started, let's ask the fabulous Fiona a quick question. Since we last met you, Fiona, the vaccine's been announced. Now, the stock market loved that. It had a real impact on bounce back of shares. How do you think it's going to impact the property market, the confidence? And what do you think it's going to do?
Wow, start with a doozy. Wow, you know, one of the things over my nearly 3 decades of property is I sort of follow what's going on in the wider economic and political, et cetera, market, but I focus solely on my area, my blueprint, and what I'm doing and what's going on in my area. I don't try and second guess any sort of impacts like that. So just like to, you know, sort of say that at the outset. So anything I'd be saying would be simple guesswork. But, you know, from so obviously the pandemic, we're having a medical issue as well as an economic issue. So it's really good news on the medical side of things, isn't it? That if this is true, that we do have a vaccine. My mum was telling me that she travelled by boat many decades ago, and she had to have a smallpox vaccine stamp in her passport. So, you know, perhaps that's going to be the way we'll be needing to travel too, unfortunately for some, because some, you know, some people don't want to take the vaccine. So yeah, great news if it lifted the stock market up, of course, but you know, is that going to sustain? I mean, its impact on the property market, I think that that's going to be a difficult one to see. You know, that's going to, because obviously what do we worry about as property investors? We worry about finding tenants. We worry about tenants being able to pay the rent. So I'm probably more interested in the winter economic plan, what Rishi's doing, what support he's providing to, you know, people, small businesses, employed people, you know, to be sure that my tenants can pay their rent. So I'm happy about the news on the vaccine. Or, you know, it'd be very difficult for me to really off the cuff think about how it would impact the property market. I think positivity in the economy helps, but you know, I've listed a couple of properties to rent this week and had great response. So people are still moving, people are still looking for property. You know, yeah, difficult one to answer really. Watch this space.
Yeah, it's definitely a big bang, that's for sure. You know, from a property perspective, you know, I've just got
true. I always have to sort of go, is it true, or are things being leaked to try and help the sentiment in the economy? You know, really, is it really true? How can they get that done so quickly? And then also how they're going to roll that out. So, you know,
yeah. I mean, it's a positive thing. It's definitely a positive thing, and you know, kudos to them. They've done an amazing job synergizing with all the other great minds in the world. Hopefully it'll sustain property prices and it will give us the boost so we don't have the dip some people were forecasting. But yeah, it's an interesting one for sure.
Like I said in the first week, we're in flux. So many things, there's so many things going on. We don't know, we're still sort of almost like in an economic free fall in many ways. We don't know where bottom is and how deep and hard bottom might be. And you know, you see the government acting to try and sort of keep things propped up. A lot of sort of because of sort of the government giving drugs to the market, no pun intended, but when those drugs are slowly withdrawn, what will happen? Very interesting times.
So we are on our 3rd session with you, Fiona. The last 2 weeks we've been chatting with you as well. Thanks for your time there. Some people might be just tuning in today. On our 3rd session with you, Fiona.
Echo.
some people might be wanting to catch up. So I would say to them, check back on our page and listen to the other interviews. And what we were talking about then in those interviews was about who you are, what's your property experience, what are you doing in your property business at the moment, and how you've looked at this last year. One thing that was really interesting to me was when you used the term black box. So over the last 9 months, you've done a sort of black box review on your business and made some changes and implemented that to improve things going forward. So I think that's going to be really valuable for people to check back on that and listen to your opinions there on how you've safeguarded your business and made it drive forward for the better this year. We also talked through a number of hacks, and I'm hoping we're going to have some more hacks today. And we also discussed about funding as well, and how you manage your funding and how you manage your bank accounts, and you have everything very systemized in your business. So I think there's going to be a lot of value for people checking back on that to add those things into their business. So yeah, what should we talk about today? We've got some ideas on what to talk about. So it'd be good if we talked about some hacks today, some recommendations for people, some tips for scaling, what strategies you are avoiding, strategies that you're seizing and grabbing hold of, how you would start again if you didn't have your wealth and you had to start again from zero with just a tiny pot. How would that work? So there's some ideas perhaps we can talk around. What do you think?
Sounds good to me.
Okay.
I'm here all hour.
So let's talk. What about your blueprint then? Let's talk about your blueprint for how you scale your wealth.
So I touched on that, I think, in the first session about how I operate. It's taken me some time to get to the point and perfect the blueprint that I feel works for me. And I've worked out what I don't want to do, largely by doing it, and realizing it's not what I want to do. And also, taking on board, I've since probably 2012, I've really been proactive. So I did it the wrong way around. I spent the first large part of my investing career sort of in isolation, working on my own. I didn't really value, well, I don't think there was networking necessarily, but I didn't really value it because I just had, it was a time and I couldn't see any return. So I'd sort of already gotten to a certain level before I discovered this fabulous world of property groups and networking and different training organizations. So I sort of that in 2012. And then I kind of realized that I needed more business help rather than property training, strategy specific stuff, because I had that kind of nailed already. So then I probably around 2016 moved across to very targeted, specific. I did Strathclyde Hunter Business School program, scaling program, and so on and so forth. And I really advocate, that is a way to help you. So all that training, helps you think and asks you questions and all that sort of stuff. So over that time, I got to the point where I realized exactly what my blueprint looked like, where, it's a very simple blueprint also. I buy assets that create a yield, create a profit, manage that process, and I take that profit and I buy more assets that create a profit. And my growth capital comes from the profits of my existing asset base, equity from my existing asset base. I don't, I recycle, yes, so I take some of that growth, but I'm not as highly leveraged as I used to be, so I don't over sweat it because of risk. And certainly certain deals that I'm doing, where I'm working on a deal at the moment that's got between 350,000 and 500,000 in sort of, uplift profit. So it's doing certain deals like that too, where I can create money, because that's one of the wonderful things in property as well. You can create money if you tackle the deal and achieve what, certain things, optimize that opportunity. So when I buy an asset, get it cash flowing. If it's not, optimize it as much as I can, and then move on to the next asset, or even multi-deal. At the moment, I've got 2 deals going through at the same time. And I don't want a complex life. I've done high hassle strategies, I've done serviced, I've done HMO, and I don't want that anymore. And actually, I find that by focusing on the more simpler activities, but sort of, I say simple, but more maybe mentally challenging. The deal I'm doing at the moment is certainly simpler, but it is a larger deal. And also, and I don't have ambition. One of the things I love about property is if I have a £200 million property company, I can run that with 15 to 20 well-chosen staff. If I go to my business groups and I talk to someone with a trading business of 100, 200 million, they'll have 2,000, 4,000 staff. So that's one of the other elements of building my propco that I like. And I have a very, very small inner circle staff, and they're all, carefully selected, trained. And, so that's a key thing as well. And I want to be able to control where I'm investing. So I've always largely stuck to the sort of 45 minutes to an hour rule from my office. I want to know that I don't actually, funnily enough, yesterday I had to complete a business plans for some funding, and they were asking about how we managed it. And I said in there, we don't use, nothing against high street agents, I've used them in the past, but I feel that by managing it within our propco, we can control, it's not just about acquiring the asset, but it's making sure it yields that return that we need. And I have a certain metrics that I use to know whether or not, I've talked about this in before in different various talks, for every £1 million of asset that I have, I know that if I have a single let, I will probably get about 20 to 30k net cash flow before tax from that £1 million of asset. And my numbers include office costs too. So sometimes people challenge me on that, but I'm always wondering whether or not they've got all the costs associated with running that business, the central costs, as well included. So I know for every £1 million, if we've got a single let from that £1 million, that's 20 to 30,000. If we've got a HMO, we're probably earning 30 to 40,000, but there's so much more frictional work going on there as well. And certain people build large HMO businesses and they create these economies of scale, and that's great. That's just not where I want to have my assets parked. And then on commercial deals, which have obviously a little bit more capital up front and all the rest, actually once I get those thriving, it's more like 40,000 and a lot less of that frictional cost, a lot less hassle. So for example, next year, at a minimum, we'll look to buy £2 million of stock. I would imagine that would be possibly 1.2 million of commercial, maybe 800,000 of residential. So I can go into that knowing that will probably generate me 60 to 80,000 in net cash flow. So profit, so after all costs before tax. And so my goal as the leader of my business is to wait, well, actually I want to make that 3 million. So what do I need to do? To current resources will deliver the 2 million. How can I recycle? Can I try and do that heavy into the first 2 quarters and then recycle? And then, and if you don't know what recycling is, it's a very powerful concept in property that you should learn if you're an early stage investor. Recycling carefully, of course. And and then the year after, I want that to be 3.2 or 4 million. That forward rolling momentum. That's what I'm trying to do. So my business is very much. A lot of people say to me, "Why do you do return on gross asset base? Why is it not return on capital employed?" Everybody, I get asked that question all the time. Well, I'm putting 200,000 in or 250,000 in to buy that £1 million. Why are you not looking at my return on that 20,000? That'll be 10, 11% on my 250. But for me, I see that this is what this asset, this £1 million property I'm buying. I want to know how hard it's working for me, not how hard my portion of the money is working, how hard my whole asset base is working for, what it's delivering to me. Because otherwise I could put that million into some other style, which strategy is working. So I spent some time over lockdown really drilling into our numbers and working out which of the strategies and the way we're operating deliver the highest net profit. Because really, as a business, isn't that what we want to do? We want the largest net profit for the least activity, frictional cost, mental aggravation. So I could talk all morning about this.
Now,
Does that answer your question?
that is brilliant. That is brilliant. Actually, there are some questions coming in, but we'll hold those for now. So rolling back a bit earlier, because some people are much, much earlier in their journey, okay? What would you do, say, if you were starting out, in two scenarios? So the first one, if you were starting out today and you had little or no money, and then we're going to start with 60,000, but let's tackle the first one first. What do you recommend to those people, and how do they start compounding to build that wealth?
Wow, so that's an interesting question. You know, this year, for the first time, with everything that's been going on, I actually asked myself, if I was starting again, would I go into property? I actually asked myself that question because, you know, it's hard to not just see all the challenges in front of you. When I sort of sat and sort of thought about it, and obviously I've got, you know, children that may decide to go into property in the future too. So what would I be advising them? And I thought, I probably would, with a cautionary tag of, but try, well, depends. When I start again, do I have my experience, or am I starting again afresh without that experience? So can I just clarify that point?
You're starting again with business knowledge, okay? You've got limited property knowledge, but you've got your business savvy, because you started being business savvy because of your training. So let's say somebody that's business savvy.
So yes, easy. Money's whilst important, not the most important part. You know, knowledge and understanding is very, very important. So yeah, I would have no hesitation in starting again in property. And by nature, I've explained that I'm an asset builder in the last interview. So I would, yes, I would go into property. I would do as much training as correct and valuable training as I could. That doesn't necessarily mean expensive, by the way. And I would make a plan, because there's plenty of people with money looking for a safe pair of hands, safe and knowledgeable pair of hands. So I'd probably possibly look to partner with somebody in that way. And there's so many more, you know, people say to me, oh, it was easy for you, you know, 22, 23 years ago. I'm 22 and a half years in. You know, it was easy for you, but actually there's so much more money sloshing around. There's so much ways that it's easy to access communities now. So find a great community and become part of that community. You know, understand how all the intricacies. There's so many people in this world that want the outcome without the work. You know, be willing to do the work. The outcome will then come. But seems like over the years we've become very much focused on the, you know, the product of wealth building and less about the actual, you know, mechanics of it, the implementation. So yeah, I'd go into property. I would be sure that I knew what I was doing. I would probably network much sooner, because I didn't do any of that. So, and I'd be part of a community and try and, you know, work with maybe a knowledgeable mentor, again, somebody that's actually capable and you know, reasonably priced. And then I would, yeah, look, it's all about how do you climb the mountain one step at a time. The key thing is the first 5 deals. You've got to nail those first 5 deals. You've got to have the ability to find your next deal in the deal that you're doing. That's how I always looked at it. Now I multi-deal, so I might have a couple going on at the same time. But in the early days, it was always about my next deal. What was I doing? How do I get my money back out? You know, and then how do I get that next deal? And each one posed its own unique challenge, to be perfectly honest. But I used to go, sorry, I'll just give this because it's a fantastic tip. I used to go to builders at their year end, about 2 months before the year end, and I would negotiate discounts with the builders. And the builders were professional sellers, so there was no, you know, a lot less emotion involved there. That's how I did get a lot of my first deals, as I went and found builders that had extra surplus stock on site, and I would get 20% off. Buy that, you know, refinance. You could do that back in those days quickly, and all sorts of other strategic deals, which I won't say because you largely can't do them anymore. But I found a little niche, and I manipulated that niche, and that niche, and that got me going. Okay. And I didn't have a lot of money then. I started with 15,000 probably.
Wow.
So I do know what that feels like.
Going back there, I know that you didn't JB, like lots of people do in the traditional manner. What you had was funding partners. So you borrowed money from people, although it had a different name back then.
Money partner. That's what I called it. Yeah.
Exactly. But I guess what a lot of people in that situation are thinking is, how do I get that first money? You've told them about having the knowledge, but how do they connect with the people to give them that money? Do you recall how you got your first lot of borrowed money from somebody else?
So I did, I borrowed from my husband's boss, was one of our early money partners. My brother lent me some money. He had a well-paid job, but no time. And I haven't borrowed off family for a while, but back then, you know, they were borrowed off them. I mean, I do it like a lighthouse style. Instead of going out hunting for people, I kind of just try and be capable and out there, and then hope that they'll see my big light shining. It doesn't actually work that well. So, you know, mixing, but also really understanding. You know, if I'm standing with someone at a networking event and I start asking a couple of questions. I remember speaking to a lady networking event. She said, "Oh, I've got 11 flats," and I said, "Oh, really? What's the what do they sort of yield?" And she said, whatever it was, 8%. And I said, "Oh, what about your net?" And she didn't have a clue what I was talking about. And then I asked her a couple of other questions, and I remember thinking, how did you get to 11? You know, really, I guess property can be like that. And, you know, I want to find that young, hungry person that have nothing, that says, right, my plan is this. I'm looking to buy, you know, high yielding single lets in this area, blah, 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 you know, and I want to feel comfortable that they know what they're talking about, and money's the last thing they need, not the first thing they need. And especially I would want to know that they know how to secure it correctly, because I've spoken of this in the past. You know, securitization is a very important thing. When I borrow money off my investors, I arranged what looks like £150,000 borrowing yesterday. And I'll take, as someone I've borrowed from in the past, I take care of that money like it's my mum's money. You know, it's secured correctly, and it's repaid on time or early, and I manage that. You know, in fact, actually, I had a couple of loans out in COVID, and my investors, and none of them, no payments were missed, of course. And my investors are ringing me up, asking me how I was doing. I'm like, yeah, fine, just busy, you know, on it. So, but just going back to that early stage, really spend a lot of time making sure that your plan is going to work, that you know what you're doing. We're a bit on like a high wire at the moment. You don't want to be falling off the high wire, because there's a lot of dangers, a lot of opportunities, yes, but a lot of dangers also at the moment in this period. So
would you advocate somebody who's starting out to carry on in their paid employment for now?
Definitely, because employment is really 9 to 5, 9 to 5:30. You've got so much, even an hour in the evening, that's 5 hours a week, plus say 4 hours on a weekend. That's 9 hours, you know, 9, 10 hours. That's equivalent to 2 full-time days anyway. And, you know, you could still get a lot achieved by a small part-time property business, and then still have that security blanket of employment as well. So, you know, it doesn't have to be an all or nothing. You don't have to give your day job up to then make yourself focus. You know, everybody's situation is different though. Some people might go into consulting and then they can pick and choose when they work. Also, you obviously want to remain mortgageable, especially now, because the lenders are, you know, looking for reasons not to lend. If you're unemployed, you might have 50,000 in the bank, which is sufficient deposit for a property, but they'll still want to see that, you know, your own income levels. I mean, I don't know if it's still 25,000 that they want you to be earning. I mean, what my husband and I did is he carried on working and I left work to focus on the property. We'd saved a small pot to get started. I went on now defunct training course. It was a couple of days long, learned about the concepts of compounding. This was in 2001. And, you know, it was like a match to kerosene. It gave me some great fundamentals And then I basically went out and made, implemented that, polished my blueprint over the years to, make it work for me. And yeah, so where are we? We're in November 2020. Whatever is providing you with income at the moment, sustain it. That's what I would be saying. Be careful and sustain it. Property will still be there next year and the year after and the year after that. So, I was a workaholic. I've admitted that, working a lot. So I didn't have children back then. I have no issue with working evenings and weekends. That's another thing I see is people that sort of talk the talk, but then you say, right, well, okay, we'll spend 2 hours in the evening. Don't watch television. Just focus on personal development. And they say, like, then they bring that balance word out. Oh, but I have to have balance. Well, great. Then you're choosing balance over, development, book reading, being on forums, tapping into communities, having coffees with property investors, stuff like that.
We're getting lots of great comments coming in here, actually.
No, I can't see them. I haven't got it up, so you have to.
Yeah, I'm just trying to catch them, actually. Susie's done her first assisted sale, so she's loving listening to your tips on the deals. I know Biro is looking at the recovery, and she liked what you said and was mentioning about the stocks obviously recovering on a V shape, and she's wondering how the property's going to go, whether it's going to be V or W. And it's a difficult one to call right now, isn't it?
Yeah, what impacts the property market on a macro level, in my opinion, is employment. And obviously those numbers aren't great, but we've got to see what Rishi does. So employment, so what am I watching? Employment, interest rates, base rates. So I read in the FT that the Bank of England had written to the major lenders asking if they're prepared for a 0 or minus interest rate environment. So that's almost like a warning that may be coming. But that's a good thing for us as property investors, because obviously people will be looking for ways to get a return. Asset-backed security, is great for investors. So interest rates, employment, what else will I be looking for? We'll see. Just thinking. So what else? Lending. So what are the lenders doing? So is anybody else? I mean, I'm getting financing through at the moment for a couple of deals, and it took a little bit longer than it usually does. It got a little bit sticky. So, if they start looking for reasons to not lend, people think that's what lenders do. They think, I remember speaking to someone, he said, oh, but that's what they do. They're in the business of lending. The British lenders, they're in the business of looking to not lend. Yeah, how can they not lend? So, how fluid is the market? What are the actual rates doing? What happens is they actually go up because they know people want the money. And because asset values are dropping and investors will go in then, because obviously that's a great environment, then the demand is surging. And we've got a lot going on here. We've got stamp duty for March. People were wanting to tie their deals up in January to be sure they get through for March. So those are the sorts of things that I'm looking at, I
think it's what you're saying there about the lending is really important and really key for people to start, if they haven't already, start forging those relationships with people who have money that's going to go into negative in the bank.
Yeah.
Start building those trust relationships with people, because that could be a win for the investor and a win for the property investor, because they're going to get money that is going to be easier to acquire than it is with all the mitigation of risk from the commercial funding.
Well, I'm buying a mixed-use commercial at the moment, 2 shops, 2 flats with a development plot in the car park. And was chatting to my broker yesterday, and he said he was approaching some of the lenders, and they're completely discounting the shops because of fears. Now, one's are dry cleaners and the other's are hairdressers, so reasonably secure. I haven't missed any payments in COVID, and ultimately, if there's any issues, I can convert them into flats. So I'm not too worried. Or we might put our business in one of them, various options. And but that's interesting that the lenders are discounting retail rent. I've worked with lenders before that take 30% off the rent roll in commercial before they do the stress test. which by default drops their loan to value to 40, 45. So you can be in a position to close for cash now on commercial. You're in a very powerful position. That cash doesn't necessarily have to be your own cash. It can be borrowed, JV partner or money partner cash, or raised off your portfolio elsewhere or something like that. So just very, very interesting times. I think that what we'll be doing in the next year or two in terms of buying could be what might take 3 or 4 or 5 years to achieve in normal times. If you're careful. I see, I'm in hunting mode. There's farming mode where you're just making sure that what you have is being taken care of. And then there's hunting mode. And I'm definitely a property hunter rather than a property farmer, believe it or not, because I think people think by the nature of being an asset investor that you're more a farmer. And every day I am looking through my patch, talking to commercial brokers, commercial agents and stuff like that. So yeah, but with the caveat, dangerous times, be careful, watch out. Lots of people too, because there's people that are struggling, you don't see the best in them. A lot more sharks out, and so and sharks don't look like sharks. They look fluffy. They look like little bunny rabbits.
Yeah, no, that is a really good warning, Fiona, because actually this pandemic, we're seeing the true colours of some people, and their behaviour is astounding. You really have got to make sure your back's covered. Yeah,
like Warren says, when the tide goes out, you see who's swimming with no bathers on. So,
Yeah, so Angela was asking, how do you see it for like really experienced landlords? What would you be kind of like saying to them as pointers to keep them going? Do you think it's easier for them now? Do you think it's tougher for them now? Should they be looking at ensuring their portfolio is geographically de-risked? Should they be looking at ensuring that tenant-wise their portfolios, de-risked by having different demographics in there? What are your thoughts?
Wow, there's about 5 questions in one there. So on the residential side, putting my residential cap on, were one of the things that we've had very little arrears, but we report to Experian. So since 2018, we report rents to credit agencies. So our tenants know that any defaults or missed payments will be reported to credit agencies. But if they talk to us about problems and create payment plans, obviously then that doesn't impact their credit, because we obviously update our software system. So they know, if they're going to have problems, that it's best to talk to us and work something out. So, and that's happened on a small scale, and we largely have working professional tenants. We are now prioritising applicants for any. So I've got 7 houses going through in the next 3 weeks, 6 of which have tenants bound, and 1 of which we haven't advertised yet. We're prioritising applicants that have a guarantor, and we say that in our advertising now. Priority given to applicants with a guarantor, and that's even the blue chip ones, that the ones that meet all our referencing. And when they ask us, we're surprised, but in the moment, with the policies of the government in COVID, it's very difficult to evict tenants. And what we're finding is they managed to find a guarantor, so that was a nice surprise as well. So advertising states, we're prioritising applicants that have a home-owning UK resident guarantor. So that's how we're sort of protecting our rent roll in that respect. I'm not that keen on geographic diversification, because back to my 45-minute sort of wanting to control my portfolio, that's the way I operate. So I'm a little cool on residential, further deployment into residential at the moment, unless it's a cracking deal. So I just completed on one a couple of weeks ago. That net yield is going to be, I think it's like 4.5%. So I got it for a good price. Bought it for 137, divorce, refurbed it, just finished its refurb, which cost about 7,000, and it's worth about 180,000. So I couldn't resist that, and not a lot down initially anyway to buy that. And so I'm doing sort of more exceptional deals. I'm not doing just average deals at the moment, because I'd rather hold on to my working capital. So she was asking about what's it like for Well, obviously, if you're an experienced landlord with a thriving portfolio, you should have some access to some capital. So now I'd be going through your portfolio, like that financial brooms, where can I cut costs? You know, there was always somewhere that you can find, you know, cost reduction, optimization. Are there areas in my portfolio I can optimize without bringing on any new stock? I've got a HMO with 2 outbuildings. I rent one out. I've been lazy about getting the second one rented. It's 80 quid a month, but get that thing advertised. That's another little rental. Could I put some more storage units in the back? You know, where can I optimize my existing stock? Financial housekeeping, broomstick to that. Can I draw some equity out ready to deploy, you know, in 2021? So are all my do I have equity in a house that I could tap into? Now's a good time to, those jobs that you put off, we all have them, the winter period, maybe take the time then to get your financials a little bit stronger, get some reporting done. I mean, I incorporated last year, and we've got a folder with all the documents, but I've been meaning to actually create a pack so that if the Inland Revenue came knocking in 5 years and started questioning me about it, I have all my documents there. Because another thing I find with my solicitors and all the rest of it, and when I do an audit, you know, do we have all of our signed off accounts, you know, in our digital library and stuff like that, you know, maybe going through everything and doing some of those jobs that bit boring, but, you know, keep the business important to the backbone of the business that we've put off because we've been focusing on revenue generation or maybe even survival during COVID times. So, you know, that's the sort of thing you can do. Just going through, you know, experienced landlords are sort of, I feel for you at the moment because I know government policies aren't helping, but, you know, we're all struggling through that. And then, maybe look at going across to commercial, do a little bit of training, start to think, you know, I've got a strong residential portfolio. Maybe it's time I looked at getting into commercial because there's so many opportunities in the commercial space unfolding.
What I found interesting in the last 3 weeks talking to you, Fiona, is although we're talking about property, it's not property that's the primary thing here. It's about business practice is what's coming through loud and clear to me.
Yeah.
We are running businesses. It happens to be the vehicle we're using is property.
Stock is property, but we're running a business. I've been saying that for years, like a boring banging on the drum, saying, you know, and especially now that more and more people are buying through limiteds, but don't really often have a clue in the director responsibilities all the way, you know, companies. But you're exactly right. We're running businesses. As soon as you've got more than 1 or 2 properties, you're running a property business. I'm a business landlord, you know, so sorry to say I don't drop chocolates off at my tenants at Christmas or anything like that, you know. So, you know, I'm a business landlord. My stock, my product is my assets. It's my properties. You can turn the asset upside down. What falls out, I don't manage. I manage the building.
And how, for people who need to brush up on their business skills, then what would you recommend? As in, is there training? Is there good books that, you know, we can improve?
So I don't know if this is atypical, but I've not found my answers in one place as I've grown my business. I've gone on a couple of half-day courses. I've done a whole year at Strathclyde. I'm on a program at the moment. There's actually a 5-year program. I'm just in year 2. I did a little bit of networking. I was in a dinner club in London for quite a while. Not great when you're trying to watch your weight in this dinner club, but for business people, you know, I've been on retreats, business retreats as well. So I've picked up little things. I've read books, you know, I've read the FT, stuff like that. So I've kind of got it for a lot of different places. So it's very difficult to sort of, there's no one place fits all answer on that really. But I find it interesting too. So that's the thing. I think depends. There's various kinds of people that get into property. There's some people that want the outcome without the work. And I'm not sure that those people really would have that desire to then spend a lot of time learning business tools and business skills. They're better off just getting 4 or 5 properties for as low debt as possible and leaving it there. Remember, I've talked about in the past about 3 kind of property people that I see. The lifestyle investor that very much like my brother, he's got a couple of cash rental properties. He's retired in his 40s, lives by the beach in Australia, surfs and dives, and the property rent pays his income. Then you've got the portfolio people that might have 20 properties, 30 properties, whatever, and they run their property portfolio. And then you have the propco people, the asset builders, the directors that want to grow a property company. You know, they might be shareholders of their property business and they want to carry on scaling that. You know, and I think it took me a long time to identify which of those three I was. Karen, you often say you're a lifestyle investor, and you know lifestyle to portfolio, and you know where you are and what sort of business you're building. And probably a lot of people go in and just start buying, but don't really understand what type of property business you're building, because there's a lot of pain around not knowing what you're trying to build, not knowing what you don't know, you know, and I could have avoided a lot of that pain if I'd have gone back 20 years ago to myself and said, right, you're building a propco, you need business training. Networking is a good thing. You need to get out there, you know, spend that time with other people, you know, and could have saved myself a lot of pain and time if I'd have been able to do that. But oh well, it is what it is.
Yeah, and I had clarity on that bit up front. So I knew, coming from a really heavy corporate career, what I wanted.
Yeah.
I wanted a number of assets, but I didn't want hundreds of assets or anything like that. For me, it was about not infringing on my lifestyle. So I could leverage the things I didn't want to do, and I could step in and step out as I chose. So
yeah. And some people who are lifestyle first, and there's nothing wrong with that. I've always been business first, lifestyle second. And that doesn't mean I don't have a great lifestyle. You know, I have a house in Florida, I've got a nice house, the children go to great schools, spend time with them, all the rest of it. But I've always known I want to have grow a large wealth base and an asset base on some level.
Yeah, that's good. That's really
nothing
good.
wrong with that as well. You know, I've come to terms with you know, there's a lot of people that say to me, I remember being in a retreat, and they said, but why? And I was like, because I can. I've got the you know, I've got the skills and the fundamentals. I know my metrics that I have to hit to make that happen.
And you love it. You know, you can see you shine from it. And it's about knowing what's right for you, which is what you said. You know,
so you're building a lifestyle business. I'm building Propco Limited Company. So Sam, what kind of business are you building?
Yeah, I was thinking that when you were I'm in a bit of a flux. So there's a business that I'm selling. There's a property that I'm buying that I will hold, and then there's a property that I'm buying that I'll develop and sell. So I'm a bit in transition there.
The portfolio, really, and then you'll see. And that's what happens. I think you do move from portfolio, you decide to really make it a propco or stick with it being a portfolio.
When you talk about the property company and you know, in your plans about acquisition on an annual basis, what your acquisition amount is that you want to do, that really interests me. But I think I'm early for that, and this next year will be the sort of platform to start being able to do that sort of thing.
Yeah.
I've probably got a little bit of fusion because I do acquire and I do sell, but I limit on what I do. So I think coming from the corporate background and where I was and the pressure and the long days, okay,
yeah,
this was kind of lifestyle, but I still wanted the challenge. So it was finding the balance and taking a little smither from that and mixing it in, you know?
Question, something just popped in my head when you were speaking, aside from saying, why is Karen wearing a Tokyo t-shirt? Also, so you do, by choice, less than you can. So you're probably able to do more deals and buy more than you can. And you deliberately don't do that because of your knowledge that you want a lifestyle business. Me, I always want, which I think defines the difference between potentially portfolio and propco, is I want to do more than I have the resources for. I'm always wanting to be bigger and to have more. And that gap, how to fill that gap and get myself there, is what I do. That's what I think.
Oh, wow. Interesting you should say that. Not always. So I'm working with some amazing people who are, you know, this is kind of like office based. Yeah. And we're looking at some pretty interesting stuff right now, but it's fun. And you see, it's that fun factor that matters to me. It's not like going to be horrible pressurized stress. We have the combined skills. And yeah, there'll be a few kind of like bumps along the way, but it's great because we can smash it, and we will. But what I don't want is to build 200 flats or something like that. I could probably.
But you're also ex-corporate. Ex-corporates tend to like to do teamwork or be involved with other professionals and skills to achieve an outcome. So, you know, I mean, I see lots of people that are ex-corporates come across to property with some really good skills that they bring to the property world. And they can do really well, but they've also got to be very mindful that there's other things they need to learn in the property world. And I can see some stumble where they think that because of their corporate skills that it will be easy, or, you know, but yeah, so whereas I've worked largely on my own, I guess, and I do have a team, but it's, you know, I have a tax advisor, I have my solicitors that I use, my broker, 2 brokers, I've got, you know, various people in my own staff, and but it's very much not a collaboration necessarily. It's me running the team in our asset acquisition plan.
No, I get that. So going back to what you said about commercial, and actually the advice you said about maybe if you're a residential landlord looking at commercial, how, if you didn't already know about commercial, would you dip your toes in? Is there any kind of resource you'd recommend, any training you'd recommend? How do you risk in that space if you've got no knowledge on that space?
Well, it's funny because having been a residential landlord, I bought my first commercial, trying to think, 10 years ago, and actually no, 2008 I think I bought my first commercial, and yeah, so we got the coffee and yeah, it's interesting. A couple of years ago I saw everybody all through the, you know, the training world, commercial conversion. It was so big. Everybody was selling training on it, mentoring, all these other things. And I wasn't doing commercial conversion. I never do anything normally. I was doing commercial investment. So buying the assets that were already, you know, there with the tenants based on FRI leases, and that's it. And I kept thinking, am I doing something wrong? I'm doing commercial investment. Everyone else is doing commercial conversion. But I couldn't, commercial conversion, it was outside of, I didn't want to do it. I did buy a couple of sites, but I ended up just getting some planning and then selling them. And now it seems like commercial investments come into favour. More and more people are talking about commercial investment. So that makes me feel a little bit better. But so I wouldn't start big, I would start small. So my first commercial investment was an office that we worked out of a couple of offices ago now, in fact, and we still own it. It's now a 6-bedroom HMO. And, you know, it wasn't going to sink the ship. We had the deposit. We knew how we were going to monetize it, how we were going to cash flow it. And it was all within the comfort zone of what we could do and our skill set. So, you know, it wasn't a huge stretch. The next deal after that was a much bigger commercial deal, but I was buying it for one of my favorites, less than bricks and mortar. So bricks and mortar was a lot higher than what I was paying for it, and it already had a sort of you know, income stream involved. And I could, again, the thing is with commercial, every deal is different. Every deal's, the opportunities, the way you're going to finance it's different, depending on, you know, if it's empty and you're going to have to put a tenant in, you're likely going to have to buy it for cash or cash alternative. So that's a tricky one to say, but I would just say, just find that that first deal that's at a level that you can sustain. And then, you know, even commercial agents are different to residential agents. You know, I find I have to do it more chasing, and they don't actually, the deals hide in plain sight a lot as well. They're not quite as obvious. They don't just serve them up to you. You've got to go out digging for them. The pub that I bought in February, I found on a businesses for sale website, and they were focused on selling the business. Well, they actually had tenants, and they were overlooking the fact that they had this amazing asset, much less than asset value, that came with the business. So they were able to get it for a fantastic price. Yeah, so just be careful. Again, you know, my policy of the first 5 deals make or break you. first 5 commercial deals, be careful, go slow, be careful, fund them correctly, don't overstretch yourself, triple check everything, have a plan B, etc., etc. B and C, D.
We're coming towards the end of our chat today, Fiona. So have you got any of your super hacks that you want to divulge?
It's such a tricky one because I'm always like, well, yeah, so what's, you know, where are you, what is it that you're having a pain point on? And then I can tell you potentially what I've done. I suppose what makes a difference what's made the difference over the last so many years in terms of my own scaling, I make sure my systems are strong enough to support the activities that I'm doing. So I've spent time making sure we have Xero, we use Arthur for our property management system. It's taken me kissing a few frogs to find my accountants. I have a fantastic accountant now. You know, my numbers are good. I can at any point in the month, I can run a report on my system and understand where we are with the arrears, where we are with the rent roll, so on and so forth. So I've put the time into the fundamentals because it's so easy to just chase the honey, you know, the deals and the revenue generations. You know, we've got a system that we've already had, but we've been developing it over the winter period. So we've made a plan, so the staff and I, to develop our checklists. So when we're buying a property, how we track at any point in the cycle where things stand, where the contracts are, and what I call who's got the ball, you know, who do I need to chase, who's holding the ball for the next move and stuff, because I want to scale up our acquisition, and it might be that part of that is dealt with by somebody else, so I need to be sure that bit's systemized. Yeah, so
you give me the impression that you have a look at the 12 months, and there's certain things that happen every month, every week, every quarter, every 6 months, and they're diarised.
Well, any business has to have structure. That's the thing. People act like this is a surprise and it's a good thing, but it's just the bare minimum. It's like getting up and brushing your teeth in the morning and going out in the day. And, you know, all businesses have got to have a calendar that tracks what's going on. It's got to have ways of keeping, you know, documents correctly. You know, we use Microsoft Office 365. And we have various folders for that. I mean, so let me say, Sam, what would you say, Sam, is a pain point in your operations at the moment? And I'll tell you if I can see if I can hack it for you. So just off the top of your head, what would be a pain point in your current?
For me, trying to reverse engineer where I need people to do certain bits that need other people to do their work to get to the end goal of when we start the project to when we end the project. And working out how much time each person needs. So I'm trying to work out, do I need an Instagram chart or, you know, a Gantt chart, or can I do that on a spreadsheet? Just trying to work that time out.
Well, a lot of systems start with spreadsheets because that's the thing. We don't need to overcomplicate things, and we don't always have to necessarily pay lots of money too. You know, lots of things can start with a good old-fashioned spreadsheet. We used to track years and years ago our gas safeties based on a spreadsheet. I mean, we don't now. We use our calendar system within our property management software. But you know, I know people will say we use Asana for a task management system. So every business has got to have a decent task management system. So we use Asana. Some people use Trello, but Trello was always famous because it had the board system. Asana now has the board system and the to-do list system. Another thing on that side of things is I always feel like I've got to be organised to then help other people be organised and organise myself. So maybe it is just a case of a spreadsheet, you know, for that. So, you know, project management in my business is done by somebody else. So I just have a weekly check-in on that. And we're not, you know, we're not developers. So then you've got to say, okay, that's November's job. My mission for November is to figure out a way that works and just get going. It doesn't have to be perfect.
We've got a ton more questions coming in. Some of them we'll probably have to get to offline, but here's one I know you're going to love. Your corporate structure. Okay. So talk about your corporate structure, how you built it up, and how you'd recommend somebody structuring their own business, does it right from the start, so that as they grow, they can add more entities to the overarching structure.
So this is a funny one because I spent many years on this, and a lot of money in accounting fees, and I got some poor advice quite early on as well, which cost me a lot as well. So that's why I now realise that you know, despite the fact I'm running a team, I need to build my own knowledge base up on accounting, entity structuring, tax planning, all the rest of it. So I quite often go to them with my plan, and then they ratify it, tweak it, and help me implement it. I don't abdicate anymore because of having listened and implemented a few things that afterwards I realised weren't actually the best advice, but made the person receive fees at the time. Anyway, so slight round over on that one. So now as property investor, because of the current tax framework in the UK, if you're going to build any kind of large entity, it needs to be done through a limited structure. A lot of people are jumping into group structures very early, and you don't necessarily have to do that because you can still do intercompany loans. So be mindful of that. A lot of them, you know, you're your staff in a business, your assets in a business, you do your development in another business, your management in another business, and you join them together by a group structure. And that was the advice I had, 8 years ago, 7 years ago, something like that. And you don't necessarily have to do it that way. But you've also got to be mindful of where your cost of living is coming from. So I still retain certain level of assets personally to help cover my cost of living, and that means I don't have, my model is I want my business to be growing and forward, you know, compounding and growing without me taking money out of it each month. So that's the model that I've been building. Yeah, so I think I answered that question. A lot of people choose to have management in a separate company, development in a separate company. I hold commercials that are opted for VAT, you know, tax in a separate company by choice. So I don't have to just split return. I mean, mine's not perfect by any means, mainly because of some of the advice I got given in the past. And I'm doing a little bit of restructuring to simplify that as well. It's a bit tricky though when you've got, you know, assets in these limiteds. But don't have too many. I know people that have like 20 limited companies, and you're thinking, right, so an average minimum accounts bill is £1,000 a year. That's 20 grand in accounting fees, just because of the fact that you've got so many limited companies. It's like we like to collect them, you know, as property people. Oh, it's a new deal. Let's set a new limited company up. Oh, I'm working with a new JV partner. We'll set a limited company up, you know. I mean, you see that, right, don't you?
I have seen it, but there's protection as well. So some people say don't hold more than X value of capital in a given limited company, property-wise, just so that you're de-risking a bit. Maybe limit it at 5 million or 10 million or 2 million, and then start another one. Different people have different tolerance levels. So it's probably good to understand where you sit. But I guess the underlying message is get good tax advice and make sure your tax advisor really knows what they're doing. Get good
tax advice, check that advice, get your own knowledge base, talk to people that are doing it, ask around, and then go back to that good tax advice and then decide to follow it. Also, you know, we serve many masters as property investors or people scaling property companies. The tax master, the accounts master, the operations master, lending master, you know, the compliance master. So if you are a property investor now, in these times, you've got to have a good base of knowledge. You run your deals, you run your team, you run your business. It's all on you, you know. It starts with you, and nobody else gets up in the morning with ambitions of growing your business. You know, you're the one that does that. You know, that's what I, you know, that's what I subscribe to. So the whole entity structuring thing too is also something I find fascinating, because are you building a legacy business? Are you scaling to raise finance? You know, to maybe turn it into a real estate trust at some point. Are you, because that's how you can do that. You can start a limited, carry on growing it. So if you do diversify across multiple, that makes it slightly harder. Are you looking to scale to sell? Are you scaling to pass to your children? Are you working with joint venture partners? Or can you hold your money in a certain limited, and that limited have shares in whatever the other asset, other. I don't do that much, so my knowledge base on that's a lot limited. I work with money partners and I borrow money regularly, private money, but I don't share the deals with them. I don't share I don't have any shareholding shared with joint venture partners. So by choice, that's how I'm choosing to build my business. So yeah, it's I've 22 and a half years, so we've had 3 hours together over these 3 weeks, and it's so difficult to share 23 years worth of experience in just 3 hours. So we've tried our hardest. And one of the things I find I've noticed over these years is it's very difficult to find a one-stop shop that will help you in your business. So where I normally start with, where have I got pain, or where do I want to grow? I'll go and do some training in that space, and that training is not always hiding in plain sight. The best mentors in property and the best people doing it aren't necessarily in plain sight. They're off to the side doing it, busy doing it. And there's definitely a gap in the market for someone to come in and have a proper scaling property program. I've tried to run them a couple of times, but they've never been very popular for some reason. I think people prefer to do training around the revenue generation stuff and less around the boring, eat your broccoli type stuff, how to scale your business and how to select the correct entities that work and stuff like that. So that's what I've noticed. I offered a training program a couple of months back. I had 20 people email for details, and not a single person was interested in doing it. So it went on the scrap heap.
I wonder if maybe the timing wasn't right for them at that time. Maybe it wasn't that they weren't interested, it was just the timing wasn't right. Because I think, you've got a massive business head there that if people delved into, they get massive value from. I just think maybe, like you say, they're there, but they're not necessarily the people who are straight in front of you. So and
I'm not the best person to train with, because I make people work. I actually make them do it. I actually want them to implement and actually achieve. Not saying that other trainers don't. I know that nobody goes into training that doesn't care about people and their outcomes. But yeah, so one of the things that have made a big difference to my business, so going on from hacks, is working with advisors. So I've got 2 new advisors joining me. It's supposed to be this month, but we've moved it to January to develop. So we're working on a project around funding and financing, one of the core areas. Being part of a community. So I'm in a business community, and we have regular sort of Zoom meetings and programs and stuff like that. So being part of a community, having the right advisors in the business, you can bring people on board, call them board advisors. Don't have to be non-exec directors necessarily if you're only a small business. So community, having good team members, it's really, really important that, I have a retained HR consultant. So in May, she was saying to me, this has changed now in furlough, you can include holiday. So, helped me. They often will bring me the things that I need to do in my business. They'll come and talk to me about it or keep me updated, because you can't know everything. That's important. Obviously, health and well-being, exercising regularly and looking after yourself. And just, what's really important to me now as I get older, and I've been in this business nearly 3 decades, is enjoying what you do. I enjoy doing deals and acquisition and closing the deals and owning the asset and it cash flowing and it adding and getting my numbers and getting my dashboard in with every month, seeing how last month was. I enjoy all that. I enjoy the mechanics of it all. And
that's brilliant, because that's, if you like, that's the geeky side. And I know you call yourself a geek, so you don't mind us calling you a geek.
I'm a total property nerd. Yeah.
But this is the problem. People don't think that's sexy, but do you know what? That is what underpins your business. get that right, you will fly. You will have the type of business you want. And you know, when Fiona offered that training, you guys should have bitten her hand off, because she does that training. She may come up with something. I, in fact, know she has got some material written because she loves content creation.
Yeah.
But you will get your asses whipped. So expect that. And if that's you and you really want to be squeezed, it might be Fiona comes back with something, you know, in a month or two's time, a subscription. And yes, it will cost money, but the value you'll get from it if you do what you're told to do, and you'll see your business fly. But
I think it's just endemic of the industry, though, is we're often like drawn to the light and the bright and the shiny, and you know, there's so many capable people out there in property, so many capable people that have achieved some tremendous results over the years, not necessarily quickly, but over the years, and they're out there operating, you know, businesses. And I think for me, it's just about having a growth mindset. I remember there was a property trainer guru with a big face last year said to me, I can't believe that you do all this training that you do. You know, you should be training. You should be going on training. And I just thought, oh, I don't see it like that. I see it completely opposite. I've got so much ambition and for the growth of my business, I need to learn that I need to, you know, my next jump, as we call it in business, is about a 6-year jump. So I've got a real targeted plan around what I'm going to achieve the next 2 years and the next 6 years. I've got, you know, I'm missing skills. I've got things that I need to need to learn and need to understand in order to make that happen. I'll get a certain place. I've got rolling momentum anyway, but I want to go, you know, if my ambition, so easy peasy 2 million in assets a year. But wait a minute, what does it take to do 3 million? God, what would it take to do 5 million? You know, and that's why I've now got my advisors, because that's the skills that they bring to the business, and that's our project and outcome that we'll be working on. You know,
key part of strategy, though, and it's, if you like, the Kodak effect. They just sat there. They thought they knew everything. They thought they didn't need to evolve, grow, and develop.
But they might be happy. They might be happy where they are. It's all about, you know, where do I want to get to? Where am I now? How am I going to get there? Three things.
But it's maintaining what you've got and keeping it current. They didn't. They just didn't train. Having that training, even on lifestyle businesses, to keep your business current and fresh.
Property's always evolving. Believe it or not, what was it? A couple of years ago, service accommodation was a massive, it was in the training, you know, it's a massive thing, but it's quieted right down now. HMO, the same thing. A few years back, HMO still being trained as a good cash flowing strategy for people. But, you know, it's, you know, that's what I notice. Property's a fluid sort of marketplace. And how do you know what current strategies or tweaking, what the tweaks, where are the risks, where are the opportunities, you know, what's finance doing? You've got to be out there really proactively following what's going on in this fluid marketplace.
Listen, way over the top of the hour, and there's loads of questions coming in still, and I know you jump in and answer them, Fiona, which is marvelous. I'm going to hand over to Sam to close, but you've got a lot of interest in scaling training on there as well, so it might be worth pushing something out.
People always say that, and then when I offer something, it's never popular. I never.
No, I know. But I think we've got a different type of person here, because they've been with us for the whole 3 weeks business, you know, series. So let me hand over to Sam now, and thank you everyone. We've had an amazing time.
Yeah, thanks for having me. It's been great.
Oh, it's been.
And I would recommend anybody that's watching to tune in each week, because that's what you guys do. You have cold-faced practitioners on in your coffee Kickstarter.
Yeah. So Fiona, what is the best way for people to connect with you if they're interested in having further conversations with you?
I have no marketing machine. I have my PA's on maternity leave now at the moment for the next summer. We've not recruited to cover that, just because we're all working remotely and we're managing. So it's very difficult. A lot of people message me on Facebook, and I guess I can put my email in the comments. That's about it, really. I'm pretty simple.
You do LinkedIn?
I'm on LinkedIn as well. Yeah. you can connect with me on LinkedIn. Yeah, definitely Fiona Talbot. So pretty easy to find. And yeah, so that's it. I don't have any kind of training offering or anything like that. So
You don't have an entourage then?
I don't have an entourage. No, I don't.
Getting on with it, getting your head down and getting on with it then.
Well, there's so much noise out there that goes on, and I'm really spending a lot of time now on just doing what I do, implementing my blueprints, growing my business, and keeping it simple but successful. That's it. So I don't want to overcomplicate things.
We know
I've
you've got
got
that
a lot of pain over the years, and it's taken me a lot of work to get to the place. But so it's easy to sit here looking, like it's all sorted, and it is actually all sorted. It's taken a lot of work to get to that place. So
But you keep telling Sam and I, you've got that itch you want to scratch on training.
Well, I like content creating and delivery. I don't like selling and marketing. So, that's it.
So I guess, Fiona, if you did do something, it would be...
I don't need the money. That's the other thing.
Yeah, I think that's really important, that you're not doing it because you need a few bucks.
Yeah, I'm doing a deal at the moment. This month, it's funny because I thought about that, and the deal's worth quite a lot of money. I was saying it's 350 to 500,000 pounds. Obviously, there's a process involved in accessing that, so I'll see that probably Q1 to Q2 next year. But so it's very difficult when you look at all the work that goes into running a training business for sort of cash flow. And I just think training business is its own business. I'm growing a property business. Training business is its own. I know plenty of people that do business consulting or training and all that sort of thing, and great, good on them. I think we need it. I do training. I believe in it. It's just about what's right for me.
Okay, so if you did think about that in the future, I'm guessing it would be an online product anyway.
Oh, I've put no thought into that, so I don't know. And just
people can connect if they want to find out more. They can connect with you, and any questions we can answer them on the page. Yeah,
and maybe they can feedback to you guys about the type of things that they need help with, and you can choose your guests appropriately in future coffee Kickstarters.
Good idea. Okay, well, we're going to wrap up. I know we've all got a dash. Thanks everyone for listening today. Really appreciate that. And Fiona, it's been fantastic 3 weeks.
Yeah.
Thank you so much for your time.
Thank you. Thanks for having me.
See you later, guys.
Bye.
Bye.